Yo, what's good, y'all? Weekly review of the week number, I think 27. Yeah, week number 27. As you guys know, it was NFP week. So, what does that mean? That means we are going to be sniping Monday, Tuesday, and Wednesday. Now, do I have the good calendar? Yes, I do. Okay, perfect. Fat Powell speaks. Did that even have effect on price? Not really, right? Not really. Ah, yeah, it had. Alright, so keep in mind, keep the news of 10 a.m. Monday in mind, the news of Fed Powell speaks in mind, and then the news of Wednesday. Now, Euro CPI, keep that in mind too. Unfortunately, it didn't deliver anything, and I thought it would. But hey, it happens. Now let's get straight into business. Let me hide this so we can pull it back up when I need it. Now, this week was a classic Tuesday low of the week, refilling this weekly volume and this volume imbalance. Right here, we fill the volume imbalance. We have a change in the state of delivery, leaving a breaker right here. And then on Wednesday, we have a continuation play at the news. And then right here, we are already out waiting to see the weekly close. And the weekly close looks quite aggressive right now. So that's a good thing to frame for the future. Now for trade number 1 on Monday. Let me see. 3rd of July. Let me check. We start with this trade. This trade that hurt my heart. This trade. Okay, so logic of this trade is that we have a change in the state of delivery right here. We respect it. So this is going to be our second stage of accumulation. And why was I taking this trade? Let me open up my notes real quick. Give me a second, guys. Give me 1 second. I'm checking my notes. Okay. So this trade was a classic New York continuation. We already has the SMR and we know that NFP week is going to manipulate up. That's why we would like to long, because my bias was this NFP week right here is going to make price retrace into this weekly volume imbalance, as you guys can see right here. And then we are going to get some kind of H1 change in the state of delivery, or maybe, like I said in the case study, that we're going to sweep it one more time and then dump. But considering the weekly close, I might need to change my bias. So right here, my bias was a fake move up to a weekly PD array, which we got. And we did not yet have reached our weekly PD array on DXY, which was the weekly fair value gap. So Monday, 17 June. So this weekly fair value gap right here. We had not yet reached that, see? So that's why I was considering continue to long, because my intermarket analysis is telling me, okay, EU reached it, but the other pairs didn't. So this was worth the risk in my opinion. Why? Because we have a M5 unicorn pattern in a key time with news back in our sentiment. Now, this delivered a beautiful 2RR, but as you guys know, on the live accounts, on the funded live accounts, you need to, for example, on ACG, if you take profits in the 2-minute window, it doesn't count. So it's disgusting. Like, this was disgusting. It goes up during the news, and then you could have took your profits. 1, 2, right here. But then, let me check. Then we're back at 1RR. Like, it's actually disgusting, these news rules, but we gotta live with it, you feel me? Okay. The negatives for this one, for this trade, was that we have already reached the weekly volume imbalance. But as I said, I think the positives outweigh the negatives by a mile. The narrative was there, a manipulation into the weekly volume imbalance. Now, what was the issue? The weekly open right here was a terrible issue. Like, this really messed it up, unfortunately. Now, this short right here is an M1 unicorn. Why is this short valid? We are in premium. We have tapped the weekly volume imbalance. We have done the NFP manipulation, as you guys can think, on Monday, like that happened on the previous month as well. The Monday made the move, and the rest of the week was just useless. This trade was a no fill though, unfortunately. But the only negative confluence I can think about right here is calling a top and calling it with the M1 change in the state of delivery. Because as you guys can see, this one right here wouldn't have filled you, and M1 didn't fill you either. But if you then looked for re-entries, like right here, I understand that, but unfortunately that did not deliver a lot of RR. Maybe if you did like a 10 pip stop, you could have got a 2 RR. But that was a nice trade. Like I would, in my opinion, that was a nice trade. If you took it, good on you. Then you're killing it. Now the day after. So this was very, very, very hard to determine if this was a H1 breaker pattern. But if we take this one and extend out in time, you could consider this a breaker pattern, because why high, low, higher, high, lower, low. And then this, for example, a mitigation block. So this was my breaker type, mitigation block type beat, considering using intermarket analysis. We had SMT at these tops right here. There was also a good confluence that this might push price down. So we have a H1 breaker pattern, we have SMT, we have a rate inside of the H1 breaker. So the breaker is getting respected right here. High time frame volume imbalance has been met. H1 change in the state of delivery. This is a textbook play. Look at how perfect it tapped. And it delivered a beautiful 2RR. But hey, I round tripped this one. That's just to cry, bro. Like, that's actually disgusting. Happens, man, happens. Now, the only negative confluence I could think about this trade is, for example, that there's a lot of built-up liquidity right here, which we have then taken and then continued up. And another negative confluence was that this might have been a consolidation profile for New York to then deliver through move down. But this unicorn just looked way too clean at a key time with a key fair value gaps in between it. So this, in my opinion, was worth the risk as well. So if you just stuck to the rules, there would have been 2 wins and 1 no fill. So this long right here would have been a win. This short right here would have been a no fill. This short would have been a win because it reached 2 RR. Then this one hurts my heart, and I'm gonna teach you guys how you could have prevented this. Let me see, when was the news? The news was at 9:30 or 10? 9:30 news, 10 a.m. news. Okay. Let's see, 9:30. So this candle right here closed. Yeah, this is so sad because you could have anticipated this move right here to be a sweep into the breaker to then continue down. But once this candle closed, it was a H1 change in the state of delivery. Then we ended up respecting it the day after. It was like this. Then we ended up using this breaker as a support, but this is the new breaker then for the continued up move. I will go over that in the next trade. So this trade, in my opinion, beautiful trade, just textbook. Let me go over what I have written in my notes. So we had a rate into the H1 breaker at a key time. The logic was New York. Wait, give me 1 second, guys. Because my journal is quite big, I need to scroll all the way to the right. Okay, so this trade was in alignment with the daily order flow. We had already have the NFP manipulation, so we were expecting a continuation towards this drawn liquidity right here. Because we are extremely close to these draws on liquidity. I was expecting this manipulation. So Monday manipulation, look at that big wick. And then the rest of the week we dump right here, which did not happen, unfortunately. That's why risk management is important. The markets can do whatever they want, unfortunately, or else we would have been rich. It was a key timing with news, early participants taken out. So the London shorters were taken out, the Asia session people were taken out. The only negative was that price should not come back all the way like this. Like, it is permissible reclaiming the breaker, having another sweep, but ideally you would want this one to push price down, and then we have another consolidation here, sweep again, and then the second stage bringing us right there. Yeah, it's just like this trade was just art, but unfortunately it didn't play out. Yeah, I would have taken this anytime. I really like this trade. In alignment with the order flow, H1 breaker, early participants taken out. We are also in discount, but the only issue was that we are coming also off, I mean, we were also in premium, but the issue was we were coming off a discount array, which was this weekly volume imbalance. And yeah, that's when you take the risk. That's when you put the negatives and the positives against each other and you take it. Like the positives outweighed the negative in my opinion right here, so I took it. Now this, after that, you guys have seen the video, and I guess I was a bit biased because I was extremely drained from trading. I should have analyzed price better. You guys know I always trade pro trend, but this is a mistake I did, and that's why reviews are good, and I'm not scared to talk about my mistakes because like that's what trading is for. If you don't review your performance, you're gonna be a loser. So we sweep the previous day low right here. We leave a beautiful swing low. And what did I tell you guys about anticipating swing lows? When we anticipate a swing lows and we have the drawn liquidity that has not yet been met, and we come off a daily, like a key level, you could have expected this move right here. Why? This, if we zoom in there, we had a change in the state of delivery. The only negatives is that the order flow is clearly bearish, so the trade is very risky and you're better off just waiting for price action to tip its hand. But yeah, you could have internalized price like that and I wouldn't. So when I said the retards are longing here, like you could have taken it if you are a risky person, if you like it could have been internalized, that trade. And maybe I would have taken it because it was a classic New York continuation day. So, and the other positive confluence was that DXY still had the weekly fair value gap to reach to, but ideally, like if we were truly bearish, this should have pushed the price down, like right here, right? And then we could have milked it towards these highs, but it didn't, man. It didn't. It didn't. I would have made so much, man. I would have made so much. I would have gotten swings from the... I would have held swings from here, pyramid here. Bro, I would have... Oh my days. That's just unlucky. That's really just unlucky. So, I understand if you guys pivoted quickly, but you guys know I'm a pro trend trader and my mental capital was off, so I need to be a bit more safe with my word usage. So excuse me if I made your buys a bit crooked with my opinion, but we did not have SMT. We had nothing. Like it didn't make any sense that price reversed here in my opinion. Like it did, like it still doesn't make sense to me. But yeah, you can't put your will onto the market. Like no SMT, nothing. Maybe you can consider this a SMT, but like what is that, man? What is that, man? Like, what is that, man? Crazy reversal. Happens to the best. So I'm going to go over that trade, but I want to check something real quick. Oh, wait, I want to check this. Maybe we had SMT under these lows. Like it make, like, what do you, like, we have no daily. Like, what is this, man? Why do we reverse right here? I guess you can say this. I guess you can say that, like, guys, if you... guys, don't be shook by price action, because this year's price action, I'm going to be completely honest. Look at this. Consolidation, move, finally a move, reversal, little move, sweep into another move. So a lot of people probably thought this was a break pattern. Slow grind up, consolidation type beat, reversal, consolidation, reverse back. Like, what is this price action? Louis? Psst, Louis. Wait, my cat's at my door. 2 seconds, y'all. Yeah. Bro, this cat is crazy. Lulu. Psst. Yeah. Wait, let me pause this recording so I can deal with my cat real quick. Alright, I'm back. Woo! So the last trade on Wednesday after the H1 change in the state of the livery. So we had 2 trades on Wednesday. The first one was in London session, which was unfortunately a no-fill if you traded it. We had SMT with DXY going into a key level. So this H1 breaker pattern is created in a key level. So we have a smart money reversal. Then the first stage is happening right here. So it was a nice trade if you took it. Well done if you took it. The only negative confluence was that we already reached the weekly volume imbalance. But then you can use the DXY confluence that we have not yet reached the DXY weekly fair value gap. And you could have continued to short. And look at how beautiful the delivery came into that weekly fair value gap on Wednesday. Look at how beautiful, man. So this trade, unfortunately, and no fill if you put your limit on the breaker. Let me put this right here. And this one was beautiful and it would have filled. Now, I'm gonna give you a quick lesson on internal and external breaks. And we are also coming off a H1 mitigation block, which was also a nice confluence. So you're using the left side of the curve with the right side of the curve. Like, let me draw it out in time. See? The first stage is right here. Then we have a continuation. And then because we are above 50% of the range, we are expecting a explosive move towards the draw on liquidity. So this was the second stage in the market maker buy model. Coming off a PDRA. Now, Honor, why didn't we retrace to discount? As I said, in the second stage, you just gotta be ready, bro. In the second stage of the market maker model, like I explained to you in the videos, if we are already coming off a discount, which we did right here, then not every price move has to retrace back to discount, because we want to, like, we don't want to give everyone the chance to enter the train. The train is going. Choo choo. Y'all feel me? Alright, so let me open up DXY to see if that mitigated premium. It didn't either. Alright. So right here, lesson on internal breaks. Am I recording? Let me check real quick. Yes, this is a nice one. 20 minutes. And I'm not even yapping a lot. It's a lot of sauce. How can I do this perfectly? I'm gonna do it like this, right? We start here. We have a high, low, high. Then I'd consider this a low. Another high, low, higher, low, higher high, Y. The higher high? Yes, it is. So that would be my higher high. Damn, now I cannot use this thing again. So this right here, this is our new range, right? Let me break. This is the high, the low. No, wait. Okay, guys, I was capping. I marked these ranges out wrongly. Let me remove this. This is the range, so you wouldn't have gotten filled unless you put it on the mitigation block. Let me check. Let me check. Ah, I remember why. Oh, guys, listen. Because we had not have a candle closure right here, I took the highest high. Because I don't consider this. Look, this candle closure right here, candle closure. Did we? Loki, yeah. So candle closure. Right here we had a sweep type beat. So all this, in my opinion, this to here was the range. And then we finally sweep it right here. So this is the new high, this is the new low. Then we sweep back up. So this is my breaker in this example. That's how I internalized it. Looking back at it, looking back at it, if you trade it with the logic of price, logic of New York continuation, this is probably a M15 fair value gap. Yeah, right here, this is an M15 fair value gap. So trading with that logic, hoping this would not pierce the M50 fair value gap, you could have entered, for example, like this. There stops on a H1 PDRA, which is H1 mitigation block, and this H1 propulsion block. You could have traded it like that. But if you wanted the entry pattern without using internal breaks will be right here. If you used this leg, for example, you wouldn't have gotten filled, unfortunately. But if you just put your limit on the fair value gap, you would have. And that was the last trade of the week. And then you're done for the week. I don't care. Whatever happens after, you are done so for the week. So the positive confluences are classic New York continuation. First stage has been set already, so the second stage is highly likely to happen. And price did not melt from the weekly volume imbalance and had a smart money reversal right here. That was also a confluence. So this trade was beautiful in my opinion. Yeah, those were the trades. They were actually a lot of beautiful trades. There would have been 3 wins, 2 no fills, and 1 loss. So guys, journal these, journal these, study at what times these occur. You already know. If you're watching this, I don't think I'm gonna do the weekly outlook right now because we have no news Monday. We have 1, 2, 3 expanding candles. We have no economic full news release. We are close to this round liquidity. Yeah, I might do an outlook. I might do a little outlook. Depending on price. Look at it. 1, 2, 3, 4 expanding candles. As I said, price does not just expand. Consolidation, retracement, or reversal. So 1, 2, 3, 4. Yeah. I might do a review. Outlook. But enjoy this review. Have a nice night. I hope you guys got some insights from this. So let's see. 1, 2, 3 wins, 1 loss, 2 no fills. Alright, boys. That was a review of week 27. What? Look at this gap. This gap is... No. Did we just gap down that far? Wow. This market is so weird, bro. I swear. This market is so weird. Crazy. Yeah, that's it, guys. That is it. By the way, this pair is insane. I hope you guys enjoyed the weekly review of week 27. Peace.